Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Galvin, jumping into the charts on this October 5th. So it was a pretty wild day, lots of volatility in the S&P 500. Right now we're currently looking at the intraday S&P 500. So this is your 10-minute chart. Each candlestick is representing 10 minutes of data. So the interesting thing to note is this is how we opened. We gapped down pre-market and we started selling off pre-market, had a little bit of a pop, and then a big red bar down intraday as the markets opened. Now, the interesting thing about this price action and what it is correlated to is the US dollar. So this down move over here, if we flip to the DXY intraday, we can clearly see that this big surge in the DXY is what led to the pressure on the S&P. And the same fall in the intraday DXY led to the exact opposite in the S&P, which was your rally over here. So notice how they're pretty much correlated directly in sync with each other as the dollar still trades at these lofty levels. So clearly the markets are highly correlated, especially the S&P. But overall, the S&P made this gap down and it looked like you were going to be heading for this technical gap to the downside here at 366, but the markets were able to be saved, and that's because the dollar was falling. And the beautiful thing is that you came in intraday, you filled this gap all the way up here, had a little bit of a pullback, and then blasted through. And if we flip to the hourly chart, you can clearly see that the S&P went all the way up and filled this technical gap on the hourly chart. Now this is the reason it's important to look at many different multitude of time frames, because you get certain patterns in different technical areas will be adjusted slightly depending on the time frame. And the hourly chart is certainly a good chart to use in the short term, especially for intraday day trading. But nonetheless, this is a little bit of bullish consolidation now, but you have made this beautiful little bit of a reversal signal off your gap. So now the question is, are we going to see some fear hit the market and fall down to this technical gap? I think it's pretty likely that we will fill this technical gap, but in the event that the markets float higher, let's just take a look where we are on the daily chart. So if we zoom out, this tail is actually still that fake print. So intraday, you did not fill this gap, and therefore the gap is still technically open, but the chart on the daily chart is showing that it's open. So if this gap was filled on the daily chart, I would be more inclined to say that this market would be bullish. But since this gap is actually not filled and this is just a fake print, which happens from time to time on charts, if you're not analyzing the intraday action, you would be unaware that there's a massive technical gap that is left open, and we all know gaps are meant to be filled, especially when the overall directional trend is still down, the larger macro trend. So I am kind of left unsatisfied that the downside is not complete. I think we're going to have one more flush down before inevitably getting a little bit of a technical bounce off of that level. So lots to consider, but in the event that the SPY continues to float up, this orange trend line connecting your COVID low all the way to your pivots where you bounced, had a rip-roaring bounce, and then you've pierced it, confirmed. Let's see if we can get a retrace back to the breakdown zone. That's kind of what I'm shaping up for on the long-term resistance, and we're very close to that. You can see that it's not that much more of a distance. The majority of the bounce has already happened, believe it or not, in 2 candles. So we're still overbought. Yes, you did have a little bit of intraday consolidation, so therefore it does open up the probability that you can move higher. But just keep in mind, this distance to this upside resistance where we will definitely get a pullback off of is roughly the same distance from where we are to this gap fill. And considering the larger trend is still down, I still think we head lower to fill this gap before touching this resistance. But in the event that we touch that, that will be our next shorting opportunity. You can see if you draw another trend line, that line may coincide with major pivot high to pivot to that area of intersection. So this could be a great swing trading opportunity as you get a check back of say $10 to $15 in the S&P before moving higher, and it would also be a potential day trade opportunity as the S&P comes into resistance. You find setups where other charts are also coming into resistance. And we're certainly going to discuss some of that moving forward. If we take a look at oil, there was news on oil. So oil is having a pretty strong surge to the upside. Now, we are short oil. We just inched into the SCO. Basically, we're shorting oil as it hits this trend line over here. And now many people are hopping on the side that oil is extremely bullish again because you just had OPEC cut. And yes, that is technically true. You did have OPEC, just announce a big barrel cut. But the reason why they're announcing that cut, if you peel back the ends of the layer and do a little bit of speculation, I think that OPEC has always had a good sense of where the demand lies, and they wouldn't be doing anyone a favor if they were cut. They would certainly not be doing themselves a favor. They're doing everyone else a favor at the short term, but if they're cutting, I think it was 2 million barrels per day, or it might be per week, I'll have to look that up. But if they're cutting, a substantial amount of oil from the market, that might be due to the fact that they are pricing in a little bit of a global recession, or not even a little bit, a large global recession could be looming. So it stands to suggest that it is 2 million barrels per day. I just looked it up. So yes, 2 million barrels per day OPEC is cutting from the markets, which is a decent amount. One would naturally assume that, obviously it's a supply-demand issue, but I think that the overall global demand is going to supersede even the cuts that they do, just because when you factor in that there's 58 trillion in wealth that has disappeared this year, that's a large percentage of that money is not filtering through the economy like it would have been during these high-demand, stimulus, low artificial periods. So I do think that oil is still technically in a bear market. I just think that there's a lot of bulls out there which have a valid reason to be bullish. Don't get me wrong, I do like the overall longer term thesis of energy and oil, but I just do think that there's more downside in the short term. But nonetheless, inching into a oil short. Could it go a little bit higher? Yes, you do, but you do have this secondary resistance, which is in close proximity, which would be a decent area to add. And then obviously this major red bar over here would be another area to potentially add to a short. So there's lots of little pockets of resistance coming up. Even if you blast through one and hit the next, you should get a somewhat of a pullback. And as we dollar cost average in, putting ourselves in at key technical levels with proper position sizing, we will certainly be able to benefit from a likely pullback in the near term. Natural gas is getting a little bit of a float, but still pretty much trading. It's just opened a new candle not too long ago, but it did finish positive today. Again, nothing really new to report. If we get a float to the trend line, then I'll potentially look to short. ITB is interesting, basically tracks the home construction. I want ITB to float up into this trend line, first short level, and then your second parallel resistance, which is around 62. We have shorted that a few times, so it'll be interesting to note. We did also short a couple new stocks, but let me go through the indices like gold. Gold initially had a sell-off, finished substantially off the lows. Now it just looks to be consolidating, but it is such an early pattern. You need a lot more days of consolidation if you're looking to move forward. Obviously, this is probably going to coincide with a larger economic data meeting when we get maybe the jobs data later in the week, and then a CPI print next week. Taking a look at silver, we did sell our silver position, but we did get a far down retrace, not back to the breakout zone. So I'm still optimistic that maybe we get another little bit of a sell-off in the near term down to the support level. I will certainly be looking to accumulate inside of this wide range green bar. I just think it is showing great relative strength that you did flush all the way down to 1996, give or take, and then you rallied all the way back up to 2063. That is showing sheer power, but I do think that silver can still retrace back down to this potential support level and be in a position where we accumulate. We've already made money. We're not going to chase it. If it doesn't hit our levels, we'll just move on to the next trade. Let's take a look at Bitcoin, BTC, USD. So let's just start fresh with Bitcoin over here. We are long Bitcoin, but overall, if we take a look at the price action, this is going to be your big level to watch. This is going to be your next big level. So Bitcoin is slowly teetering along this breakout trend line. So connecting a high all the way back in March of 2022, Bitcoin has broken out of that line, hasn't confirmed yet, so we'll have to consider watching Bitcoin. But nonetheless, this is short-term bullish price action. You are also above the previous 2017 high, which I believe is at 19.7, give or take. We can actually flip to the weekly just to get a proper price action. There it is, so 19.642. So it is super bullish, the fact that you're back above this trend line and you're back above the previous all-time high, holding support. If Bitcoin can actually confirm positive and close on a daily basis, you know, anywhere above this pivot here at 25,520, then it's off to the races for Bitcoin. You're likely going to get your first resistance point and a big squeeze all the way up to this level, which is about a 20% gain, all the way up to 25,000. So that's kind of what I'm watching on Bitcoin. I do think if the markets catch a little bit more of a Bitcoin can get a little bit of a short squeeze rally here, which we are long or just underneath this previous 2017 high. So let's see how Bitcoin reacts. We are day trading and holding XOM and swing trading all at the same time. So it's very rare when levels come in to play, whether they work as a day trade and a swing trade. But what is happening here is you're getting a move in Exxon, and let me just erase all of these lines again. So Exxon has had this beautiful gap up, surge, another gap, surge, and another gap. Whenever you have, this is a classic technical pattern, and it's always, or not, I shouldn't say always, but in most cases, this three surge, gap, always, when it hits into resistance and key technical areas, the pullback after this type of pattern is very highly probable. And one of the reasons is because the gaps naturally attract the price action back down. So you have a gap all the way back here to 95.26. You also have a gap all the way back here to 92.11. And this is going to be a little bit of an educational video to show you how price action works across different sectors. So you have these technical gaps, and you also have this gap down here, now pulling the price action back down. So when you have, you know, multitude of gaps, technical gaps, all to the one direction, the downside, and you basically just filled the technical gap to the upside today, this leads to the conclusion that the likelihood of the price action getting pulled down is substantially higher than it going up, especially when it's overbought, especially when it's into a multiple factor resistance over here. You can see you have your major pivot high to pivot to pivot, 3-bar surge, gaps to the downside, upsloping wedge pattern. And then you also look at oil, how oil's into resistance. And then you also look at the XLE, which is the energy sector, which just filled the gap into a downsloping trend line, also in a 3-bar surge to a high resistance technical gap. So when you factor in that we're holding this day trade overnight comfortably at this level, I do think we're going to get a sharp pullback in this level. And I do think that probably the stopping point is somewhere along this trend line, so to speak. So maybe over the next couple of days we get a sharp pullback down to this 95, but I do think over coming sessions you can at least get a pullback to this downsloping trend line, preferably even all the way back down to this technical gap at 91.96, give or take. So there's a lot of interesting things going on. We're also shorting a finger motion. This one's just gone absolutely crazy. This one's a mobile phone and data company. When you look at it's trading at 63 cents, and now it's all the way up, at the highs was 9.39. That's over 1,400% move. Let's just take a look at the weekly chart. Lots of resistance here. Chart's a little bit messy, but let me just show you what I see on the chart. So overall, this is where your big reversal happened in your trend, which basically solidified the trend was in a massive downtrend. And you've had this massive impulse surge right off of this technical level. But now you're into a little bit of an interesting overbought scenario where you've had 1, 2, 3, 4, 5, gap, 6, 7, 8 candles. And this is a positive day because you finished higher than the previous high. So even though it's a red candle, this is straight 1, 2, 3, 4, 5, 6, 7, 8 days in a row of upside. And then you look to see you're right into these pivot tops, you fill the key technical gap, and if you look on your larger time frame, you're also into this weekly reversal signal in a straight shot. This is an excellent technical area to potentially pick up this play. Now we do have to keep in mind that this is an extremely small cap stock, so it can overshoot, but that's why we've waited extra time. We've let an impulse surge gap to the upside, and now you're starting to see the buy volume. Even though the price is starting to increase and go higher, you're starting to see the buy volume dwindle. So whenever you start seeing the buy volume start to fall drastically, and you've had your blow off surge in volume, but you're still making higher highs, that just shows you that the price reversal is going to happen very, very soon. And whenever you see stocks like this go all the way up on no news, you know it's kind of a pump and dump scan, and it's even difficult to get shares to borrow and short. But this one I do think will pay us out handsomely. Could it go all the way up? Yes, it could. To our next target is 16, and then it could all the way go up to like 33 in theory. But I do think, just due to the fact that we are still in a technical bear market, I don't think the liquidity is going to take us much higher. But even if it does, we're only at 1% of our portfolio, so very, very small amount to be shorting. Let's just take a look at the S&P futures here, shall we? So the ESP, actually I'll just go to my my charts over here. So S&P futures are up. You can see that we are trying to break out here. Let me just erase some of these lines here. Whoops. Okay, we'll leave that. So you can clearly see that I've been doing some work on the futures. I do analyze them a lot. But overall, if we're taking a look at what's transpiring, the futures are trying to push up. The max upside I see is basically to the top of this channel, which it is down sloping, so it could come all the way maybe into 39.60, 39.50, give or take. But that would be a pretty sharp move up if it did that. Now, the interesting thing about the S&P futures is that you're still technically going to be trading inside of this topping tail. So this little bit of a reversal signal late into the day, that's going to be our major resistance point on the chart. If we can get through that on a closing basis and confirm, then it does dictate that this chart has potentially a lot more upside to at least, I would say, the 38.54 level. That would be your next major resistance. So let's continue to see how things shape up. But if we can get through this reversal signal, then we definitely have some resistance coming up at the 38.50 level, and that would be certainly an opportunity to potentially start shorting. You also have this trend line over here on the futures, which will act as resistance. You can see if I drop it down, that's where you got your topping tail. It also met a technical gap fill. So it's really cool how once you start analyzing charts on different time frames, you start picking up different points of intersection and resistance. So you can see that I do think we're going to have to chop here for quite a long time in order to see potentially some more upside. But if that dollar rolls over, be sure the price action is going to eat through this resistance and move higher. But just remember, on the SPX, SPY, we do have that gap that has not been filled to the downside, just around this green level, 33.66. So odds are I do think we start seeing that gap to the downside. If the markets really start falling and taking out this pivot tomorrow, it's going to spook a lot of investors, and you're going to see, I think, that move happen sharply into that gap, and then you're going to see a big bounce, kind of like you saw intraday today. I think that's it for today's video. I hope everyone enjoyed a little bit of this educational analysis, and we'll stay tuned for more action. And congratulations on the trades that we did close today. We closed a beautiful Shopify winner. We closed a Peloton day trade for a lovely gain there. So congratulations. Once again, we're continuing to